Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets for the week ending Friday, June 20th, 2025. Kicking things off, I'm Max Profit. Key indexes showed mixed performance this week. The S&P 500 index closed at 5,968.34, down 8.62 points, marking its second consecutive weekly decline, despite maintaining a strong positive trend. The Nasdaq Composite Index advanced to 19,447.41, gaining 40.58 points. Market breadth showed weakness across major indexes this week. The S&P 500 saw declining stocks outpace advancers 314 to 182. Similarly, the Nasdaq Composite recorded 1,764 declining issues versus 1,287 advances. The S&P 400 MidCap followed the same pattern, with decliners leading 242 to 151. Short-term returns showed mixed results. The S&P 400 MidCap Index led weekly gains at 0.61%, while the Russell 2000 rose 0.43%. Month to date, the Nasdaq Composite leads with a 1.75% advance. Looking at long-term performance, the Nasdaq Composite shows the strongest 10-year annual return at 14.3%, followed by the S&P 500 at 11%. The Russell 2000 trails with a 5.1% annual rate over the same period.
Checking out best and worst performing equities, I'm Penny Stock. SRM Entertainment leads with an extraordinary 661% surge to 11.4. Next Technology, Holding and Regencell Bioscience follow with gains of 184% and 143% respectively, both showing strong upward momentum. The week's returns are particularly impressive. SRM Entertainment posted a staggering 661% weekly return with average daily gains of 140%. Regencell Bioscience demonstrated remarkable strength with a month-to-date return of 65%. Looking at longer-term performance, Regencell Bioscience shows impressive strength with a 360% one-year return and 33% three-year gain. SRM Entertainment maintains strong momentum with a 1,050% return over the past year. Among large caps, Jabil leads with a 17.2% gain to 206.20, hitting new all-time highs. Estée Lauder and Advanced Micro Devices follow with gains of 11.7% and 10.3% respectively. Weekly returns show Jabil maintaining momentum with a 17.3% gain and strong daily average returns of 4.1%. Advanced Micro Devices posted solid month-to-date returns of 15.8%. On the long-term view, Jabil shows remarkable 10-year returns of 812%, while Advanced Micro Devices impresses with nearly 4,871% gains over the same period. On the downside, SeaStar Medical leads decliners, dropping 70% to 0.35. Stardust Power and Smart Power follow with losses of 66% and 64% respectively, all hitting new all-time lows. Weekly performance shows severe declines, with SeaStar Medical dropping 70% and Stardust Power falling 66%. Year-to-date, Stardust Power has declined nearly 95%, showing persistent weakness. Leading the downside this week, SeaStar Medical Holding plunged 70.1% to 0.35, hitting a new all-time low. Stardust Power and Smart Power also recorded steep losses, falling 66.3% and 64.4% respectively, both marking new historic lows amid strong downward trends. Among large caps, Enphase Energy led declines, dropping 21.3% to 35.85 and hitting a new 52-week low. First Solar fell 17.2% to 145, while AES and Accenture declined 9% and 8.4% respectively. Looking at weekly performance, Enphase Energy showed the steepest decline with a minus 21.3% weekly return. First Solar followed with minus 17.2%, while year-to-date returns show Enphase down 47.8% and Dow falling 30.8%. In terms of longer-term performance, Enphase Energy shows significant weakness with a minus 67% one-year return and minus 80.6% three-year decline. Dow and AES have also struggled, both down over 45% for the year.
And now onto U.S. sector performance, where energy leads with a 1% gain, closing at 676.31, showing upward volatility and 3 consecutive weekly gains. Technology and financial services both display strong positive trends with gains near 0.8%. Market breadth reveals energy showing exceptional strength with 128 advances versus 19 declines. Financial services shows a notable disparity with 140 advances against 462 declines, despite its price gain. Other sectors display more balanced advance-decline ratios. Looking at returns, energy leads month-to-date with a 9.2% gain. Technology follows with a 3.8% monthly return, while financial services shows a slight monthly decline of 1.2%. On longer timeframes, technology dominates with a remarkable 558% 10-year total return, averaging 20.7% annually. Financial services and industrials both show 10-year returns around 150%, while energy trails with a 21% decade return.
Energy stocks showed strong upward momentum this week. EQT led with a 6.3% gain to 60.44, marking a new all-time high. Valero Energy followed with a 5.2% increase. Chevron, ExxonMobil, and Phillips 66 all maintained winning streaks of multiple weeks. Month-to-date returns show impressive gains across the energy sector. ExxonMobil leads with a 12.1% return, while EQT and Phillips 66 both posted returns near 10%. Daily returns have been particularly strong for Valero Energy and EQT this week. Looking at longer-term performance, EQT stands out with a remarkable 60% one-year return. Valero Energy shows the strongest 10-year performance with an 8.9% annual rate of return. Phillips 66 and ExxonMobil maintain solid 3-year returns above 33%.
Among underperforming sectors, healthcare stands out with a significant 2.6% decline and very strong negative trend. Communication services fell 1.7%, despite maintaining a strong positive trend. Basic materials and utilities showed mixed positive trends, with utilities moving sideways for 3 days. Market breadth indicators reveal considerable weakness in healthcare, with declines outpacing advances across all timeframes. Utilities shows particularly weak daily breadth, with 61 declines versus 23 advances. Consumer cyclical also displays concerning breadth, with decliners significantly outnumbering advancers in both daily and monthly timeframes. Weekly returns highlight healthcare's struggles, down 2.7% with notably negative daily averages. Communication services and basic materials show modest declines while maintaining positive year-to-date performance. Consumer cyclical continues to underperform with negative returns across all timeframes. Long-term performance metrics show communication services leading with a 129% 10-year return, averaging 8.6% annually. Despite recent weakness, consumer cyclical has delivered strong 10-year returns of 175%, while healthcare shows concerning underperformance with negative returns over the past year.
Healthcare stocks showed significant weakness. Eli Lilly led the decline, falling 6.9% to 762.73, with a very strong negative trend. Bristol-Myers Squibb and Johnson & Johnson dropped 5.8% and 4.6% respectively, both showing strong negative trends. Looking at returns, Eli Lilly showed the steepest weekly decline at -6.9%, though maintaining a positive month-to-date return of 3.4%. Bristol-Myers Squibb stands out with concerning year-to-date losses of -17.1%, while Johnson & Johnson managed to stay slightly positive for the year. Long-term performance reveals Eli Lilly leading with an impressive 823% 10-year total return, translating to a 24.9% annual rate. In contrast, Regeneron Pharmaceuticals shows concerning weakness with a -51% one-year return and negative performance across all time frames.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.